Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Wednesday, what is it, the 6th of January 2021. The time has just gone 0500 GMT, so it's early in the morning here in the UK. Asian session just coming to a close, European session firing up. Our lunchtime is the US North American session. Right, so let's have a look. This is already written up. Excuse me. So away we go then. So yesterday, what do we have in terms of bracketed flows? Well, the dollar was the unopposed negative driver. So there was no backdoor flows at all. The negative driver to the extent of -143. So positive flows predominantly went into the pound, and the euro and the yen were the identical positioning here, so plus 37 apiece. So they were the positive rock and positive mover, so they were joint if you like. So that was the situation yesterday on activity of plus or minus 143. Now intra-week, this is becoming a little bit more relevant now because we're sort of starting Wednesday. So we've got a negative opposed driver in the yen, sorry, a positive opposed driver in the yen, with a positive rock in the euro, and we've got front and back door flows, and they're going fairly equally out of the pound and the dollar, and this is on activity of plus 69. So we'll just finish this off before we talk about it. Intraday then, so what's happened so far today? The most up-to-date flows from about 15 minutes ago on the today, which is Wednesday the 6th. We've got the unopposed negative driver in the pound at -43. No backdoor flows, but you can see that the euro and the yen have hardly moved, and so the bulk of, or nearly all of the front door positive opposing flows have gone into the dollar at plus 39. And this is on activity of plus or minus 43. So that's what's happening there. So remember, today we've got German CPI, and later we've got the Fed minutes. So that's quite a lot later in the UK. So that's what's happening in terms of data, economic calendar events. Right, so let's try and make some sense of what's been going on. Now, we were looking at the euro yen. We were saying that the stops were vulnerable. Where was it? The stops are vulnerable at about 125.859. So that was the euro yen. 125.859, and we've got a treble or 3 times position hedged at 20% short, and we're expecting quite a bit of downside in the euro yen, although it's been very sticky, very range bound. Now let's just tidy this up then. So yesterday you had a weak dollar to pretty much the detriment of everything else. So you had pound strength and joint euro and yen strength. So and so far this week, we've had a bit of yen strength, not much. The markets haven't really moved that much so far this week. So you've had a bit of yen strength in the positive driver, Equities have been coming off a bit. Excuse me again. And there's been a general sort of lackluster feel to the week so far, and it's been chopping, a lot of chop. And today we've got the pound being sold off. Now we've started to enter into some long-term positions, and if we let me just shuffle this. Now, from a positional sense, there are three pairs which are particularly extended. There's the pound, New Zealand, the AUD, New Zealand, and the pound, Swiss franc. Now, the pound New Zealand is operating at about 1.5. The AUD New Zealand is about 1.5, and the pound Swiss franc is 0.5. Now, what do these figures mean? Well, they're figures from the modelled floor. So in other words, the pound New Zealand is about 84% in terms of away from the ceiling, or it's about 17% off the floor. That's the way of looking at it. So, and likewise, the Australian New Zealand is in a similar position, and the pound Swiss franc is even lower. So these pairs are sort of in terms of the complex cycle. They're operating about here, quite near the model floors, and as such we've taken fully hedged positions out on these, so we're just monitoring at the moment. And the the pound New Zealand is dropping quite nicely. We're about 100 points wrong on that, but obviously it's hedged. So and these are fairly steady, the other two. So that's going to be our major positioning going forward at the moment. Those three. So we're positioning for long trades in pound New Zealand, AUD New Zealand, and pound Swiss franc. Now the pound New Zealand is very soft at the moment, and therefore the right side of it, if you're trading naked, as it were, just single trades, is to be short the pound New Zealand at the moment. It looks very soft and very weak, and we're just riding it down at pretty much zero cost at the moment. So that's where we're at then. So what's happening, just to round up then, we've got these elections in Georgia coming up. The results, anyway, they've had the elections. So basically you've got the Fed minutes, and interestingly you've still got this outsized strong German data, which isn't really showing a lot of signs of tailing off. Now the first whiff of German softness, and I suggest everyone's going to run for the exit. So the Euro complex, which is quite pumped, is going to go south. So that's something to look out for. And you've got, what have we got? We've got some German data coming out today. We've got German CPI. So watch out for any softness in the German CPI, because this will be the first hint of a turning point in German data. We've had 3 or 4 weeks of outsized German data. So that would be where we're at. So we're taking tentative long positions which are fully hedged on the pound New Zealand, AUD New Zealand, and pound Swiss franc. We're hanging in there on the euro yen, because we're expecting that to take out the stops at about 125.859, and just be very aware about if if the euro data comes in, or the German data comes in disappointing, then this is going to be the first catalyst, if you like, for wholesale euro complex weakness. So hope that was useful. See you again tomorrow.